Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today is episode 107, Net Unrealized Appreciation. Okay, well, welcome back to the show. Before we dive into today's topic, I hope that all of you out there are staying safe and healthy. Again, this pandemic, hopefully one day will pass. In the meantime, we will keep kicking out fresh content from Falcon Wealth Advisors to you in the form of podcasts, blogs, and this YouTube channel. Quick plug to my business partners, Corey Bittner. If you haven't come across his podcast yet, In the Money Insight, he's cranking out content every week. Also, my other business colleague, James Lewis, he's launched his own blog and podcast called The Financial Philosopher. So be sure to check those out at falconwealthadvisors.com or wherever you download your content. So again, we're out there on Apple Podcasts. Of course, our blogs are on our website. And again, if you're watching this on YouTube, thank you so much for tuning in. For today's topic, I wanted to talk about a unique strategy called Net Unrealized Appreciation. And this really applies mainly to people or individuals that have accumulated publicly traded company stock in their 401k plan. So if this is you, I would perk up and pay attention because it's a potentially strategy that could possibly lower your taxes and give you a lot of flexibility as you approach retirement. And the way this strategy has come about is basically if you've accumulated a lot of your company stock over the years of working there, typically it has what's called a low cost basis, or a cost basis you can just think of the average price that you paid for this stock over time. Okay, so if you've worked at your company 20, 30, 40 years, sometimes they'll do their match in company stock. Sometimes you'll just buy it as part of your, semi-monthly contributions or however often you contribute to your 401k. And over the years, hopefully your company stock has grown, and now the price that you've paid for it is quite a bit lower than the price that it's actually worth. And that gap in here is called the net unrealized appreciation. And what we do is for our clients that have a sizable net unrealized appreciation, when they go to retire or leave their employer. Now, it's very important that typically you have to separate from employment to take advantage of the strategy. And you also typically have to empty the entire account out, right? You can't just do it with a piece of it. You have to either roll over some of the account and do net unrealized appreciation, or do it with all of it if it's all in company stock. But the idea is, rather than roll over your 401k or your company stock portion at least, you actually take it out, you extract it or pull it out of the 401k plan. You put it in a taxable account like a trust or an after-tax account. And at the time of the distribution, you're typically only liable for the cost basis as a taxable event at your ordinary income tax bracket. Now, rules do apply if you're under age of 59 and a half or 55, depending on what rules you're looking at. You may be subject to a penalty, so you also want to double check that with your CPA, certainly. But all else being equal, if your cost basis is low, you may be paying taxes on a relatively low amount, and then the gain is only taxed if and when you sell the shares, and it's typically taxed at your long-term capital gains rate, which for most people is lower than their ordinary income tax rate. And that's why people do this. See, the idea is if you roll it all into an IRA and then pull it out, it will be treated as ordinary income. But if you do this unique strategy and you do the net unrealized appreciation, well, this lower amount will be taxed as ordinary income, but all of this gain would be ideally at a lower rate, which would be your long-term capital gains rate. It's a very complex strategy. We do a lot of it at Falcon Wealth Advisors for our clients. We certainly want to get a CPA involved that understands what NUA or net unrealized appreciation is to help us crunch the numbers and make sure we're doing everything correctly. But if you do work at a company or know somebody that has accumulated publicly traded stock in their 401k and they're looking to leave their employer, whether it's retirement or just separate and go on to something else, I definitely would encourage you to work with a fiduciary-minded financial advisor like us at Falcon Wealth Advisors, who can help you crunch the numbers and see if this very unique tax planning strategy works out for you. Now, I want to make a quick point here. This doesn't necessarily mean for everybody. So just because you have company stock in your 401k doesn't mean it's something you should take advantage of. Some people, it makes sense to roll it over for whatever reason. But again, my point here of today's show is that it's definitely something to look at and at least have a discussion about with your financial advisor and your tax advisor to make sure that you're looking at all of the angles before you do a rollover or take a distribution from your 401k. This kind of is a second step in my series of how we manage concentrated stock for our clients. It's something we do a lot of at Falcon Wealth Advisors. I did have a previous show where I talked at a very high level on options trading. Well, this net unrealized appreciation is another unique opportunity for people that have accumulated a lot of their company's stock in their 401k plan. So as always, if you'd like us to crunch the numbers, we're certainly happy to do that at Falcon Wealth Advisors. If you're watching this and you know of somebody that has this issue or has this unique opportunity, certainly feel free to send them my info. Basically, email is probably the best way to get a hold of me, and my email address is jake@falconwealthadvisors.com. I'm also out there on all the social media platforms, or not all of them, but most of them. So I'm out there on Instagram, Twitter, Facebook, and LinkedIn. And again, thank you so much for tuning in via YouTube, or if you're listening to this on your favorite podcast platform. That is all the time that I have for you today. I hope, again, like all of you, are staying safe and healthy out there. Just know that this pandemic will pass. Nobody knows when or certainly how, but all we do know that is constant in the world is change. As for my fun topic, much of the same. We got a ton of trees ripped out of our backyard. So now my grass is actually getting some sunlight. We managed, to do a lot of work. And now we're replanting, which is kind of fun. So we're going to replant some Taylor junipers. I don't know if anybody's familiar with those, but they're pretty cool looking trees. They kind of look like columns. So I'm pretty excited about getting those planted here in the coming weeks. And maybe once we get it all done, I'll flash up a pic on here to show you kind of what we've done to our backyard. It's been a lot of fun working on that with Rachel and, of course, our landscaper and our tree guy. Really awesome people, and they've done a really good job. So again, that's all I've got for you. I have tuned into Yellowstone on a recommendation by my wife and a client. Really good show. If you haven't checked that out yet, I highly recommend it. It's very, very good. A little graphic at points, but I feel like not all TV, but a lot of TV is that way right now. But it's a really, really good show, and Rachel and I have certainly been enjoying that. So again, hope all of you, again, are staying safe and healthy out there, and thanks again for tuning in, and we hope you have a great week.